June 27th, stock playbook with a little sample for those of you listening to this video. Just a small tease. I mean, we do about 30 minutes of content, sometimes an hour worth of content every day, giving you trading opportunities, entry levels, exit points. But just wanted to go ahead and show you. A lot of people emailed me today, market looks good, market looks good. It doesn't look good. Dow Jones is up 108 points, NASDAQ Composite 35, S&P 11, 0.9 to 1.3% higher between the three indexes, but there's no volume. There's no conviction behind it. This is end of quarter window dressing. Short covering, we hit the 200-day moving average. You could expect the bulls to jump in there. But until I see some heavy conviction behind this or reclaiming of the 50-day now downsloping moving average, this is a market to me that still wants to go lower. That doesn't mean it's going to go tomorrow. It could go tomorrow, but this little bounce could continue through the week. It wouldn't surprise me, which will put us up towards the 1300, maybe even the 1310 area. But I don't see us getting much higher than that. We have the big vote on Greece on Thursday. If that vote doesn't go through, it's lookout below. I don't know how else to put it. So I still think the best thing to do is take some profits where you got them, build a watch list, take your shots at trading opportunities, whether it be earnings or shorts. In that order, if you were a subscriber today, Fusion IO, we mentioned this stock every day last week. We had this the first day they came public. We bought some under 23, a placeholder. We got more under $20 a share. We thought it was a great opportunity to get long, and we've ridden it higher. Today we sent out an intraday alert, taking half off the table. Why? No other reason but the stock's up 70+% from where it was a week and a half ago. You got to take some off the table. You get fortunate enough to buy a stock at 20 or lower, and it runs up to 35 in a matter of 7 or 8 days when a market has been doing nothing. You got to take some off the table. That's exactly what we're doing. If this continues higher and goes to 40, 50, 60, I'm happy. I still own half my position. If it sells off, round trips all the way back down to the low 20s, I'm still happy. Yeah, I gave away some of my profit on the remaining half, but I sold half up here at the highs too. That's how you trade the markets when the market environment is like this. Responses, we mentioned it should be on our watch list on Friday. Today it was up again, nice little bounce today, but that doesn't mean you run out there and buy it. If this market rolls lower, this stock could be expected to come in today. You need catalyst. Lindsay Corp is coming out with their earnings Wednesday morning. We mentioned this last week. The stock has been moving since. This is a stock that's giving you a nice risk to reward ratio. You take a shot. You got institutional sponsorship. You take a shot with the options. By the July, whether it's the 60s, which is what we were looking at when we first realized this company was coming up, they're already up 40%. Whether it's the July 60s or if you buy the 65s, take a shot to the upside. You have limited downside risk, limited to what you decide to put in the option, whether it's one contract or 10, or 50. You know exactly how much you're willing to risk, which is everything. If Lindsay doesn't work out, this thing could go ahead and drop 10 points, 15 points. But I'd rather lose whatever I put into an option, a predetermined amount that I'm willing to risk, than to subject myself to laying out $63,000 and subjecting myself to a lot more downside from a monetary standpoint. So, Lindsay Corp, Wednesday morning. And LinkedIn, LNKD, I'm getting emails, should we buy this rally? Should we buy this? No. Stock's been a downtrend. This is a name we didn't like from the first day they come public. We said you could short the stock. Once you were able to short it, we got this bounce here, another bounce here. It pulled back. We said cover. Why? Because it's end of quarter. What you're seeing is them rally this thing end of quarter. It's called window dressing. Could see some more upside, maybe the 80, 82. But LinkedIn is a name that I would be more inclined to short it up here in the low 80s than I would be to buy it here in the mid 70s. I still think LinkedIn goes to $50, $55 a share and maybe even lower. This company is not earning any money. It's overvalued, and I'll leave it at that. That's it for a sample of the stock playbook for tonight. You want to see some of our other picks that we have lined up going into tomorrow morning? Come check out our website. Sign up for a free trial. I think you guys will like it. I'll talk to you tomorrow.